Hi, this is Raju here from Precise Trader, and this is a monthly webinar, and the topic which we are going to talk is precise turning points using price level principle. Please try to make this session as interactive as possible because I think we are here to learn as a group, and the more we have a discussion as a group, I think it will be more interesting while we go on the session because it's going to be a long 1.5 hour session. And most of you here, I believe, you all are based on technical traders, and I do not know how many of you are trading on fundamentals, right? And can you just quickly tell me, how many of you, does your strategy allow you to take your trading decisions to show long or short with ease? Meaning, in the sense, you just one look at it, you decide on whether the whether are you going to be a buyer or are you going to be a seller. It all depends whether does your strategy tells you. And also your risk versus reward justifies, meaning most of you when you take a trade, I do not know whether you ask yourself whether does your risk against the reward. That means if your risk is, let's say you're risking about 50 pips and your reward, does it give you at least 50 pips profit or less than that or more than that. And emotions and greed, whether are they under control? Because this is a question you need to ask yourself by the time when you take your trade. Like for example, you key in order to go long or short, and how do you feel? Meaning in the sense, how does your heart beat, and whether are you remaining calm, are you more tensed up, or are you nervous, or that ask yourself whether does your strategy tells you that. And re-entry without emotions if stopped out. See, you must understand that trading is a business or a sport. I always call it a sport played by different sportsmen, and it all depends on on what kind of sportsman and what kind of attitude or appetite you have. Certain sportsmen, they like fast sports, and certain sportsmen, they like slow. So the same thing goes when you come to trading. Must ask yourself whether are you patient enough to wait for your profits to move on, or you're not you're very impatient, meaning in the moment when you take a trade you want to realize your profit quickly. It all depends what kind of character you belong to or what kind of character you have. And also the high or low for the day is known. That means ask yourself if I'm going to tell you that the day high is going to be for this particular instrument is this level, how would your trading decisions would be? Meaning in the sense, if you are long or short, at least you know that okay, that the high or low is going to be capped to that level. So the moment when it's capped, you should know that if you are a day trader, especially being a day trader, it would be good to know these levels, because by the time if you want to hold on to your profit or you want to book your profit fast, it all depends on that kind of decision. And also the benchmark for trend directions. I believe, see, most of us would have learned, or most of us would have listened to most of the speakers talking or saying that the trend is up or trend is down or the trend is sideways or the trend is whatever whatever you call it. But you must understand that what time frame are we talking, and at the same time, during when the price comes to certain level, meaning in the sense whether the trend is still valid, or you have a benchmark, meaning in the sense once the price breaches that level, okay, now what should I do? Whether the trend has reversed or the trend is still in that particular directions which you are looking at. And that's your strategy also gives you an entry, exit, stop loss with accurate price level. See, that's where we are here, meaning in the sense the theory behind this we use is called a price level principle, and it's unique of its type. But also you must understand that price is a king, and you have to follow the price at all times if you want to be successful in this business. And precise turning points, of course. Sometimes you must know that I always believe that how many of you are like driving. See, when you are driving, you must know that you must take care of yourself. At the same time, you shouldn't be a threat to other users as well. Meaning, for example, when you drive, when you want to turn right, you must always put an indicator saying that you're going to turn right. So in the event, someone is following you, at least you should know that, okay, you do not end up in an accident. The same thing goes with trading, because trading is also, it's like a driving, you need to follow the price, and the price always gives you certain signals before it's going to turn, and it also gives you certain signals whether it's going to turn up or turn down, or whether it's moving, or it's not going anywhere. It's directionless. Sometimes it's just like you are driving, when you are drunk, this is what happens. So sometimes you must understand how this price works, and when you understand that, then things would be much more clearer and easy for you to follow the direction of the market. And if you do not have any of this, excuse me, then you need to follow this price level principle, or we call it PLP, right? So I do not know how many of you have ever sit down and really thought about this. This is the way you need to approach the market in order for you to be successful. And in order for you to, the best part is, in order to, you must learn to control your emotions and greed. That means, when you're making money, you must also remain calm. And when you're losing money, you must also, learn to control. Because when you are losing money, you would be in a hurry to book in, cash that loss. That means every time you take in and the trade goes against you, especially when you are in the wrong, you're losing money, you must learn to control yourself. Otherwise, you would be thrown out of this business. The price level principle, I'm sure a lot of you would be wondering what is so special about this, what is so special about this theory behind. See, we are proud to say that, okay, we have invented some tools to get this numbers, because, and you must understand that at the end of the day, this trading is about a number. It's a number game, right? So you should know that, okay, if you have precisely able to derive that numbers, that means, if you're expecting the market to turn up or turn down, especially on whatever time frame you are following. For example, like let's say you use a 5-minute or 2-hour chart, or even a day, right? So you should be able to know this in uptrend, so that for you to take your trading decisions. And also you must understand that most people most people who are using technical analysis, they follow somehow or rather one of these tools. Because like, for example, I'm sure if you are a technical trader, some of you would follow moving averages, some of you would follow trend channels, some of you would follow Fibonacci, some of you will follow even Elliott wave, Gann numbers, you name it, because there are so many tools available in the market. And the difficult part, when you apply so many tools, is of course you tend to get confused, especially if you use different oscillators, indicators, especially you follow so many. Then by the time your indicators and oscillators starts to give you signals, you tend to be get confused, meaning in the sense whether to be a buyer or whether to be a seller, or by the time the price moves, the price, it might be too late for you to take entry. So the numbers we derived, okay, based on the price, we are talking about this price level principle, is we use Fibonacci numbers, and we use a different set of numbers, because you must understand that Fibonacci numbers is derived by, like most of you should know that, it is derived when you add the one number with the another number, and when you divide, this is, you get that's the Fibonacci combination. But different reporters or different analysts, they use different set of numbers. For example, certain people, they follow 0.618, certain people they follow 1.618, and someone even 0.382, 0.236, so on and so forth. But of course, we have a unique way of using the Fibonacci numbers, and later on I would show you on the live chart to see how can be derive that particular number, or whether can be look at a turning point. Maybe I can show you the chart. Maybe what I'll do is I'll just show one by one, so that for you to see how is this level or this price is level is been derived, right? Let me show you a chart. Okay, let's say we are looking at let's say this particular cross. Okay, no matter whatever time frame you follow, right? So, like for example, let's assume the price is starting to move higher. So let's assume that we are looking to see this or project this level of turning point. You know, whether this is going to be a turning point here or whether this is going to be a strong turning point. You want me to use? Okay, I'll show you a stick chart. Uh, Okay, so what happened is, if let's assume that you are looking for this turning point. Of course, this is a 100% retracement, and let's assume this pullback you're looking at. So of course, you can use retracement, right, from this level to this level. Of course, these are the levels which we use, and the tricky part is, you know, we have so many levels. Meaning, like if let's say you put in 0.236, 0.382, then you know that the price is going to follow. And of course, you can ask yourself, or whoever is doing analysis on a technical analysis, the price is going to turn on any one levels, right? It can be whether it's 0.5, 0.618, or 0.786, or even 1, or 1.272, or 1.382. But the question you need to ask yourself is, which level the price is going to turn? Okay, that's the $1 million question you need to ask yourself. That means, if I know that, you know, the moment once the price is starting to move from here to this high, and if I know that the price is going to turn at 0.0707, of course it's not a Fibonacci number, but 0.786, right? So if I know that that number is going to turn beforehand, then I think, you know, when the price is starting to fall, I think you can be very patient enough to see the price hitting that level, and and by the time it tests, then you can go for a long. So that's where we are here today. You know, I'll be sharing with you, you know, how to see whether the price has turned up or turned down. And by the time, you know, when you take your trade, you know, to be in a much more clearer and much more clearer on your side. Excuse me. I'm sorry. The next one is, I believe some of you use trend channel, and trend channel is also a unique way of projecting the price. And this is, trust me, you know, this is a very powerful tool. And in fact, we use trend channel in most of our analysis. And of course, the tricky part is, you know, when you use a trend channel, is all you need to have is about 3 points in order for you to draw a trend channel. You know, two points for one line, and the third point is for you to project the channel. But again, you must know that drawing a trend channel is an art, and there isn't any, I wouldn't say there isn't much or many books on trend channel, because it is even though we call it a very simple method, meaning all you need is 3 points to draw a channel, but choosing that points, that's what makes you whether, you know, you want to be successful in identifying the turning point, or whether, you know, you're not being that successful. Let me show you the same chart again. Right? So what I'm going to do is, okay, if I'm going to draw a trend channel, let's say I draw a trend channel from, I got to consolidate this, right, to see a bigger picture. So if I'm going to see this, you know, if I'm going to see this high, okay, what I can do is, I can take this 2 points, right? So if I'm going to take these 2 points, like point 1, point 2, and the point 3, I have to choose whether this point, you know, to see a projection. So if I'm able to see or identify this channel, okay, if you see this, the price has moved, and in fact it failed to test that high, and when it fell, let me remove this Fibonacci, right? So, and when it fell, the channel became a support. then right now the price is started to move up. And again, if you want, you can also draw another channel or a minor channel within this level. So there are many ways you can draw channel. Of course, the tricky part is identifying the 3 points, and that's what makes you successful in pointing or turning levels, precise turning levels. So this is another example which most traders use or most analysts use. And the next tool which we also use in getting this price level principle is Andrews pitchfork, right? This is another powerful tool in order for you to see or project the price upfront, meaning in the sense, if you want to project the price turning point. So this is, let me show you the chart again. I'm just showing you one example so that, to see and to get yourself convinced that, okay, this tool is working and you can use this level to project your future turning points. So again, I'm going to use, this is Andrews pitchfork which I have drawn. So can you see here, this is a similar way the price has moved to the channel, and it failed to reach that resistance, and once it started to fall the median line, and the price is consolidating within this median line. So this is the characteristic of Andrews pitchfork. So for those of you who are using Andrews pitchfork, you know what I'm talking about. But for those of you who are totally new to this tool, then I suggest probably you do your own research to get to know on this tool to use it efficiently. And the next tool is, of course, moving averages. And I know that this is one of the simplest tools to follow. And I believe many of the traders, many of the technical traders in this business, they use this tool somehow or rather. But the tricky part is choosing a specific numbers. That's what makes the difference on whether to see whether that number is working for you or whether to follow that numbers. So, and also when you use moving averages, you must know that when you use moving averages, you can only use on retracement. Excuse me. On retracement. Okay, what do I mean by retracement? Meaning you can't use a moving average to project future turning points unless you use a displaced moving average. That what tells you a turning point, right? But again, when you use that displaced moving average, the chances are what number you follow, that's what makes the difference. Sometimes what happens is, you use a specific number and another number may be acting as a support or resistance. So for this example, okay, maybe I tool. So this is a typical 89 moving average which we use. And if you see here, again, when you use moving average, there are different types of moving average, like excuse me, simple moving average, exponential moving average, weighted moving average, so on and so forth. So there are so many types of moving average. So the tricky part is which moving average to follow, right? So that's what makes things more difficult as a trader to do your analysis and do. Like for example, if I'm going to use a moving average and take my trading decisions, chances are I may not get signals every day, probably once in a week, or probably once in a month, especially if you use a higher time frame. So it's another tool which most technical traders use. The other numbers is also we use in order to get this price level principle is we use Gann numbers. Again, Gann numbers is a very complex traffic, and of course we use the square of 9. But there are different ways which you can use to derive a turning point. But Gann numbers, it takes quite long time, so that one I wouldn't want to talk more about it. So here, what is so special about price level principle? Coming back to this again. See, when we use all these tools and find the intersection point of any two tools, then the change is imminent with time decay. That means, what I mean by that. That means, for example, when you use this tool, like for example, let's say the price is moving up, right? So when the price has reached overbought or oversold, together with any one of this tool, you use it, you should be able to get the precise turning point to for the market, right? So the reason why we are using price level principle is, see, I've been a technical trader for almost like 15 years. So I came up with this concept whereby, this price level principle, because end of the day is, once you know that the price is going to make a turn at this specific level, then you should know that, okay, any one of these tools is already, the homework has already been done for you to take your trading decisions. So that's the reason why we use this price level principle, and that's the reason why we have been successful in most of the time predicting the turning points precisely on most occasions, right? So now I'm going to teach you. In fact, this is a sample of our report. This is just to quickly tell you, and I'll be using the report. If I have enough time, then probably I can show you one of the report and look for live trades to take trades based on the price level principle. But if I do not have, then we would be doing on a section 2, which is what's agreed, meaning in the sense, for section 2, we will be looking at live trades based on the price level principle. So basically, the report, this is how it looks, and all you see is only numbers. So, and of course, there are so many numbers, but all you have to do is you only have to pay attention to certain numbers for you to take your trading decisions. So as we go on, I will talk more about this. So now I'm going to talk about, early on I said, when we look at, like for example, like Fibonacci numbers, okay, there are so many levels for us to follow, meaning 0.236, 0.382, 0.5 or 0.618 or even 0.786, so on and so forth. Okay. So what is going to happen is, now I'm going to tell you how do we know that which level is going to hold and which level is holding for us to make a look for a turn, right? So this is basically I'm going to use a simple bar chart. For those of you who are following on candlesticks, please bear with me, because of course I can show you, but I think bar chart would be much more easy to learn and identify, so that, because when you compress the chart, it is much more easy to get a bigger picture. So basically, when you look at a bar chart, it shows you opening price, highest price traded, lowest price, and closing price. So this is a simple example of bar chart, and for those of you who have been well versed in bar chart, this is what it looks. When you look at it, on the left side is always the opening price, and on the right side is the closing price, and the highest tip is the highest price traded on whatever time frame which you are looking at, and the low is the lowest time traded for whatever time frame which you look at. That means if you're looking at a 5-minute, so that bar tells you the high and low opening and closing price of that 5-minute. But if you're looking on the daily chart, so it gives you a similar picture. So that's how you look at a bar chart, and one look at it, the price opened and the low and moved up and closed at the high. So this one tells you that this is a buyer's market. So this example on this, the second example is, this is the market opened on the left. As I told you, it's open on the high, and the price went and closed below the open. So this is a seller's market, and the application is still the same, meaning the high and low for the high is the highest price traded for the time frame which you're looking at, and low is the lowest price of the time which you're looking at, right? So this is how you look at a bar chart, and this is how you take your trade. So now I'm going to go ahead and show you to identify, to see whether the market has turned or reversed, right? So this is what we are going to do. Please feel free to ask if you feel that I'm going too fast. Okay, you can slow me down, and if you feel that if you have any doubts, then I can always go through, and I'll be looking at some live examples for you to get yourself uh, 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 cleared your doubts, right? So here, looking at basics, when we talk about higher highs or higher lows, okay, these are the terms used when comparing two bars. When you look at a bar chart, this is how we compare whether the price is making higher highs and higher lows. So when you look at the higher high, a bar's high is higher than its previous bar's high. So this can be any time frame which you are looking at. That means it can be again, it can be on a 5 minute, it can be a 15 minute, 30 minute, 120 minutes, of 240 minutes, whatever time frame which you are looking at. And again, higher low, this is when we say higher low, that means bar's low is higher than its previous bar's low. So these are the words which we describe in order for us to see whether the price is making higher highs or higher highs and higher lows. So on this particular example, can you see the high of bar B? That means this is the bar B which we are looking at. The high of bar B is higher than the high of, this is the high of bar A, right? So this is higher than bar A, and hence the high of bar B is called higher high. And the low of bar B is again, excuse me, is higher than the low of bar A. So hence the low of bar B is called higher low. So whatever time frame which you are looking at, right? So when you compare yourself, right, this is what happens. That means, when you compare yourself to see when the price is making higher highs and higher lows, okay, there's a very strong, there's a very high probability that the market is going to turn or reverse. So now we are going to talk about the lower high and lower low. These are the terms used when comparing two bars again, and the lower high is, the bar's high is lower than its previous bar's high or the prior bar's high, and lower low is, the bar's low is lower than the previous bar's low. So again, when you look at the chart, this is how the picture looks. That means you look at the bar A as a referral. That means when the bar A is the highest high, and when the bar B is lower than the bar A's high, and the low is lower than the bar's A low, okay, then it's making a lower high and lower low, right? So this is how it looks on a typical bar chart. So, and for those of you who are in technical analysis, you should understand or accept the fact that the market never moves straight up or straight down, but they move in waves while continuing to move up or down. And in such waves, it forms valleys and peaks. So on this particular chart, on this particular example, when you look at it, okay, this is a peak you are seeing, and this is a valley you are seeing. So when you are able to identify a precise valley and a peak, then your trading decisions would be much more easier and much more simpler to handle. That means if I see if I've already seen a peak, so the next move should be, I should see a valley form. The formation of this valley should be formed. Then only you can see a peak forming again. So that's so it's very simple to follow that statement, right? So now now I'm going to explain to you. Basically, the market moves or the trend directions are denoted by short-term valley or short-term peak. We call it a mid-term valley or mid-term peak, or even a long-term valley or long-term peak. So basically, in simple, this is what makes the market signals happen, and this is what you use it to see whether the market has reversed up or reversed down. So when you do that, when you are able to identify the valley and peak with ease, then chances are, you would not be in the wrong direction or wrong side of the market. So, am I going too fast? If you feel that I'm going too fast, please tell me. I can slow down a bit. But if you're happy with my speed, then I can keep on carrying on with it. All right? Okay. Thank you very much. All right. So please try to be as interactive as possible, so that we can make the session more interesting. Okay, now I'm going to give you some guidelines or some rules to identify when do we see a short-term valley, right? So when do we know whether the short-term valley is already been seen or not yet? Okay, I'm going to give you these conditions. A short-term valley is identified when the low of a bar has higher lows on both sides. That means after you have seen a peak, okay, let's say the price is falling down. Okay, we do not know when the market has turned until you see a short-term valley. So what happens is you have to wait for the price to give you a short-term valley confirmation, then you can go long. So in other words, the same example which I used before, when I was talking about this Fibonacci levels, because you do not know which level is going to hold, because this is where most traders go on the wrong side or the wrong direction of the market, because they feel that the low is already seen, then they go for a buy, then the market breaks lower and lower, and as a result they get stopped out most of the time unnecessarily. So here the condition to identify a short-term valley is after the prolonged downtrend. That means when the price is making lower lows and lower highs, okay, the moment when you see a higher lows forming on both sides of the lowest low, right, then the bar C has formed a higher low when compared to bar B. Hence we consider that this is a signal of a valley formation, right? Again, this is not a confirmation. This is the first signal the price is giving you, or first indication that is giving you that the market is going to reverse. This is just like, again, I'm giving you an example of a driving. See, for those of you who are driving, especially when you are following another vehicle, when the driver in front of you gives you an indicator or tells you and puts an indicator saying that it's going to turn right, there is no 100% guarantee that he's going to turn right. Sometimes at the nick of the time he may decide that he wants to go straight and he can keep on going straight, right? But the same thing goes on the price. So this is the first indication that tells you that the price is going to turn. So you have to take note or get yourself prepared that we have to get ready to buy or long, because the short-term valley is going to be seen. The second condition is when the low of the bar has equal lows on both sides of the lowest low. That means the lowest low is bar B and C, right? So when you have equal lows on the lowest low, and when you have the bar D which has formed a higher low when compared to bar B and C, hence we consider that this is a signal for a valley formation. Again, this is just a signal. That means the price is giving you an indication or putting an indicator saying that it is going to turn up. So this is what is going to happen, right? So now I'm going to give you a confirmation. That means when do we know that the market has reversed or the market has turned directions? The condition to fulfill to see a confirmation of a turn is a valley is confirmed only when the price closes above the high of bar A. That means you are looking at the lowest bar B. That means when the price is made a lowest bar, you look one bar before. That means the moment once you push one level, that means you take the previous bar and you have to wait for the price to close above that high of that bar. So when you see that condition, then we can confirm that the low has already been seen. Now the price is going to go higher and we can get ready to pull the trigger to go for a buy or long. So this is what you have to, this is the signal you need to look for to see yourself that whether the market has reversed. The next condition, the second condition which I gave you, you have equal lows, and at the moment when you see the higher lows of the lowest low, and when you see the price closing above the bar A, right? Once the price close above the bar A high, then this is a confirmation that the market has bottomed or the market has made a short-term valley, right? Just give me a minute. So far, is it clear? If you want to repeat, I can repeat it, because this message has to be get it through, so that when you go to the next level, because the next level gets a bit more complex. So I don't want to yourself to get confused, right? Okay, thank you. So again, it should be noted that you should be waiting for the confirmation. So once this confirmation is seen, you can confirm that a short-term rally is already seen. Then you can expect the price to go higher. So let's look at this. So now this is the valley here. So sometimes what happens is, see, in real market condition, it's not so clear as or so simple as what I have explained, right? So sometimes you have to wait. The moment you see a few bars within the lowest low, what should you do is you have to wait for one more bar which is higher than the lowest low. So you have to wait for this particular bar, and you have to wait for this price to close above this high. Sometimes what happens is the price might break above this, then it might have a false break, then the price might still follow on. That means still makes lower low. So on this particular example, what happens is we have to wait for this price to clear and close above this high, and the moment once it's closed, so this is the confirmation that a short-term rally is seen, and you see the price starting to move higher. So this is another example, because you must understand that a valley is formed, then a peak is formed, then a valley is formed. So it goes on alternate, and this is how the market moves. And once you are able to identify this simple logic, and once you are able to know this simple logic, things might be very clear, and you can take your trading decisions with ease, right? So here again, you see the price is making lower lows. This is the lowest low, and we have to wait. In fact, we have 1, 2, 3 bars within that the lowest low, right? So what we have to do is we have to wait for the one more bar which is higher than this. In fact, this bar is the highest, and we have to wait for this price to close above. And once it closed, then you see the price moving higher, or the price has turned. Okay. The question, how are you able to predict if the day is going to be buyer's market or sellers, and how to use? Okay, that one I'll answer this as we go on, right? So you try to ask questions pertaining to what I teach, because I don't want to slow down the session now. So when we go on to the live market, then you can ask more questions based on the live market. So that would be much more easy to handle, or I don't want to slow down the session, right? So this is this is how you identify a short-term rally. So this is another example. You see here a short-term rally, and this is a confirmation. And once you see the confirmation, the price has risen up. Then again, you see a short-term rally again is forming, and you see a confirmation here again, and the price started to move up. Then you see a short-term rally again. You see a confirmation here. Then it goes higher, right? So this is how it is done. Yeah, you're right. A short-term a link with any time frame, it works. So what happens is you can use this same theory or the same principle to apply on any time frame. That means if you see a short-term rally, you can use on a 1 minute, but 1 minute can be pretty choppy, and sometimes you are bound to get stopped out. So it will be best for you to use a higher time frame, meaning either 5 minutes, 10, 15 minutes. Then that would be more reliable signal. Okay, now I'm going to teach you on how to identify a short-term peak. A short-term peak is a direct opposite of short-term rally. So what you do is, when the high of the bar has lower highs on both sides, that means when you see the price making higher highs, right? And when you see the highest high, and when you see the high of the high, that means the highest high, and you have a lower highs on both sides, then I'm sorry, this is the particular, on this particular example here, has formed a lower high when compared to bar B. Hence, we consider this is a signal to form a peak. Again, I repeat, this is it's just giving you, the price is just giving you a signal that the market is going to turn down, but it doesn't mean that it has already turned down, or it is given you a confirmation of a turn down. The second condition you need to look for a short-term peak is when the high of the bar has equal high. Again, it can have 2 or 3, sometimes you even have 3 equal highs. So when you have 3 equal highs and you have a lower high, so there's a very high chance that the price is going to move higher. So this is how reverse or turn down. So this is again the bar D has formed a lower high when compared to bar B and C, hence we consider it's a signal for a peak formation. So now, excuse me. Now I'm going to give you a confirmation of when do we confirm that a short-term peak is already formed. The confirmation is exactly opposite to the same thing as I said on short-term valley. What you have to do is, this is the highest bar, and you have to look one bar before, and you have to wait for the price to close below that low of that bar low. So the moment once the bar closes, gives you a confirmation of a closing below that low, then this is a confirmation that a short-term peak is already been formed. This is another condition. We have A, B, C, D. When we have B and C equal highs, so we have to wait for the price to close below the bar A low. So once it closes, then it gives you a confirmation. And also do take note that you shouldn't take a long time to give you a confirmation. Once it gives a long time, then the price becomes in a range trading or sideways market. Then you do not get a valid signal or confirm signal. So do take note that it should happen within a couple of bars. So if you take more than a couple of bars, then this is what happens. Okay, excuse me. This is the peak which we have formed. Short-term peak is confirmed once the price closes below this, and you see this, once it gives you a confirmation, the price seldom moves above that high, right? So, and you see the price moving, making lower highs and lower lows. So this, we have another peak. This is where it gives you a confirmation. Okay, this is another example which you are looking at. Peak gives you a confirmation, the price moves down. This is another peak here, gives you a confirmation, moves down, so on and so forth. Okay, so far is it clear? Because now I'm going to teach you the next level. It is going to be a bit more confusing, but if you understand the concept well, things will be much more clearer. Excuse me. Okay, the next I'm going to discuss is called midterm valley, right? Midterm valley is a bit more complex than short-term valley, but when you are able to identify a midterm valley, what happens is your risk versus reward would be very high. That means you would get a very high reward, especially when you are able to identify a midterm valley. So a midterm valley, the condition to see for a midterm valley is, midterm valley is defined as higher short-term valley on the right side of the lowest valley and closing above the immediate short-term peak. So this is the condition you need to fulfill. That means what happens is I have to wait for the price to make the lowest short-term valley, right? Because you have to see when the price makes a lower short-term valley, you have to wait until you form the lowest short-term valley, and you have to wait for a short-term peak to be formed, right? And the second short-term valley should be, okay, this, I repeat again, this is defined as a higher short-term valley on the right side of the lowest valleys. That means, you need to have another short-term valley which is higher than the lowest short-term valley. Then you see that then this valley, it becomes a midterm valley, and you see a huge reward, or you see the price moving by a big move. So this is what happens when you are able to identify a midterm valley. So again, the current valley must close above the most recent peak, and the peak must be between the two valleys. Then the midterm valley is confirmed. That means, sometimes what happens is you have a lower peak within the highest peak. So we have to wait for the price to clear that or break that the highest peak which it has already formed. Then only it gives you a confirmation that the price is it has already formed the midterm valley, and the price is going to make higher highs and higher lows. So far so good. The second condition again for to see a midterm valley is midterm valley is defined as equal short-term valley on the right side of the lowest valley and closing above the immediate short-term peak. So what happens is a similar picture, but you have equal valleys. Okay, for those of you who have already been in the business, probably you might call it a double bottom, right? So you can even call it a double bottom, but the words are different words, but I think overall our assumption or analysis is still the same. So what happens is, so the second condition to fulfill is you have equal short-term valley and we have to wait for the price to close above the high of the the peak, above the immediate peak within that two short-term valleys. So the same condition, the current valley must close above the most recent peak and the midterm valley is confirmed. So here, can you look at this example? We have the lowest valley here, then we have a peak here, then we have another valley. So this valley is higher than this valley. So we wait for the price to close above this high. Then it gives you a confirmation that, okay, this is the midterm valley is formed and the price is going to go higher and you expect the price to move higher and as expected the price is moved higher, right? So far so good. Okay, this is another example. We have it here, a short-term valley here, and we have another valley here, and this is a peculiar example because what happened was the peak formed and straight away the valley formed. So that means the bulls are being very strong. So on this particular example, what happened was the bulls are being so strong. That means they do not want to be missed out from the big move. So as a result, they got carried. So as a result, you can expect the price to move higher. So this is the thing you need to take note. So this is again is the same example, right? So we see here this is another short-term valley which is higher than this. So as a result, a midterm valley is confirmed. Now I'm going to explain to you what do we mean by a midterm peak. So the condition is just directly opposite as midterm valley. It says the midterm peak is defined as a lower short-term peak on the right side of the highest peak and closing below the immediate short-term valley. So what happens is you have a peak, you have another valley, then you have a peak. So once the price closes below this, it's a confirmation that this is a midterm peak. So you're expecting the price to go lower or make lower highs and lower lows. So again, the same condition is the current peak must close below the recent valley. So the midterm peak is confirmed. So the second condition is midterm peak is defined as equal short-term peak. So sometimes you see equal highs, or you can call it a double top, or whatever words you use. So it's still the similar picture. So on the right side of the highest peak and closing below the immediate short-term valley. So the ones it gives you a confirmation that you're expecting the price to go lower and lower. So the same condition, you have to take note that we have to wait for the confirmation, meaning that the price has to close. Then that's where it gives you a confirmation. So on this particular example, can you see here? We have a short-term peak, we have a short-term valley, then we have a short-term peak, and this is where it gives you a confirmation of a midterm peak. So overall, you see the price, and you can expect the price to go lower and lower. So this is another example: a peak, a valley, again a peak. So it gives you a confirmation here. So you see the price coming down, and as expected, and you expect the price to go lower and lower. Okay. So now I'm going to talk about a long-term valley. The question: does the peaks and valley have to reach the same point to be considered? Okay, your question is not that clear. Okay, maybe can you be more clear on your question? Does the peak and valley have to reach the same point? Please, you must understand that in Forex market, okay, sometimes, when you look at, see, it's always very nice to discuss when you look at history or when you trade on market, because the tricky part is when you look at live market, that's what it becomes more tricky and more difficult. So but it's, based on history, it's always very nice to see and very nice to visualize. So let's see. Now, I'm going to talk about to you what is a long-term valley. The condition is a long-term valley is defined as higher short-term valley on both sides of the lowest short-term valley and closing above the immediate highest short-term peak. So, I hope you get it right, because this is a bit more confusing than the previous one. That means, see, what happens is, this is the lowest valley you have seen, and you have seen another valley which is higher than the lowest valley. And when you go one left, when you go onto your left side, right, you see another valley which is higher or higher than the lowest valley, right? So this is the confirmation that long-term valley is seen, and as a result, you expect the price to go higher highs, and it did go high as expected, and this is where it gives you a confirmation that a long-term valley is confirmed, right? So again, you're right. This is the inverse head and shoulders, or whatever name you call it. But overall, is I think our analysis or our projection or interpretation should be the same. So this is how you use to identify a long-term valley. So this lowest low would become a long-term valley, and this last valley of the tree must close above the highest peak, and between the three valleys and the long-term valley is confirmed. So you're right. So you have to look at three valleys. That means three short-term valleys. Then you have to ask yourself whether you have seen a lowest short-term valley, and you have a higher short-term valley on the other side, and we have the other on the right side, one on the left and one on the right. So then it's a long-term valley, and usually it indicates a possible trend reversal. So now I'm going to talk to you the second condition for the long-term valley, which is a long-term valley is defined as equal short-term valley on one side and the higher short-term valley on the other side of the lower short-term valley and closing above this. So in other words, you can have a double bottom. That means equal short-term valley. It can be this short-term valley equal, can be on the left or in the right, doesn't matter. But as long as it is equal, you can consider that as a valley. And the moment once you see higher short-term valleys, and once the price closes above this peak, right? So this is where you see the peak, and once it closes above this, then it gives you a confirmation that the long-term valley is seen, or a long-term trend change or reversal or inverse head and shoulders, whatever you call it, has been formed. So you can use it to see your taking your trading decisions or analysis. So again, the same condition is you have to take note. The last value of the tree must close above the highest peak between the three valleys. Then the long-term valley is confirmed, and it can even indicate a possible trend reversal. So on this particular example, you see here a valley here. This is a valley here. This is a valley here. So in fact, this is the lowest valley which you see, right? So again, it gives you a confirmation, because in fact we have two peaks here. We have one lower, and we have to take the highest peak for a confirm and reliable signal. So this is where the price struggled, and in fact once it closed, it had a minor pullback. Then it started to move up. So this is a good example. And here again, on this example, we have a valley here, and we have another valley here, and this is where it gave you a confirmation. So this valley became a long-term valley. So this is how you use it to take your decision, right? So the next one, we are going to talk about a long-term peak. Okay, the condition I'm going to give you is the condition is a long-term peak is defined as a lower short-term peak on both sides of the highest short-term peak and closing below the immediate short-term valley. So in other words, this is a mirror image, right? It's a mirror image of a long-term valley. So this is because we are looking at a long-term peak. We are looking for a sell signal. So here again, looking at this example, we have a short-term peak. We have another peak which is the highest peak. We have a lower peak. So overall, it gives you a long-term peak or head and shoulders pattern, and you see the price coming down, and again it's even a possible trend reversal. Now we look at the second condition, which is the same, similar to the second condition of the long-term valley. It says a long-term peak is defined as equal short-term peak on one side and lower short-term peak on the other side of the highest short-term peak, and closing below the immediate lowest short-term valley. So again, this is the peak. So we have another peak, we have another peak. So once the price closes below this valley, which we are looking at the lowest valley. So once it gives you a confirmation, then it gives you a turning point, and we know that the price is going, the trend has already reversed, and we are expecting a trend direction, or trend reverse, so we can wait for a bigger profit. So this is what you should be doing. So this is let's look at this example. Here we have a peak here, valley here, peak here, valley here, peak here, valley here. So overall this is where it gives you a confirmation, and you have a pullback, and of course the market has reversed. So this is another example: peak, valley, peak, valley, peak. So again it gives you a confirmation. So it comes here. Okay, so far I think this is what I need to tell you for as far as the slides is concerned. So I still have another half an hour, right? Because in fact I was running through a bit fast because I want to finish the slides. So please feel free to write to us if you have any doubt. You can always visit our website. We can do. So now what I'm going to do is, okay, we are going to have an interactive session. Okay, we are going to use the next half an hour to do as interactive as possible. Please try to be as interactive as possible so that we can learn as a group. Then we can discuss, and maybe you can tell me what is the market which you are interested in, and you tell me the time frame which you are looking for. Then we would discuss on the live chart. Then I will tell you whether the market has turned or whether it is going to go higher or lower, right? So do you want maybe you feel free to ask any market you want to discuss. I'll be looking at live market, and you will do interactive. Then you tell me. Okay, just give me a minute. Okay, we look at Euro USD 60-minute chart. So let me pull you the chart. Okay, Euro USD 60-minute chart. Okay, now you tell me. Okay, whoever. Okay, I do not know. Okay, Mastermind 2010. Okay, maybe you tell me, what should we do? Okay, what is this based on my explanation? What have you learned, or what peak have you seen? Or maybe the others, can you tell me what peak has already been formed on this particular market, and what are you expecting? Whether the price to go lower and lower, or are we expecting some pullback? Maybe can you quickly, because try not to, because see, the more you delay, I think the more we are going to stuck, or we are going to delay. But I think if you are being fast, then we can quickly go to more examples and we can start discussing. Can anyone tell me? See, I have a valley here, I have a peak here, then I have a valley here, then I have a peak here formed, right? So now the price has breached the valley. So do you think it's a long-term peak or mid-term peak? How many of you feel it's a mid-term peak? See, a long-term peak is you need to have two valleys, two peaks on both sides of the highest peak. So you're only having one onto your right. So this is a mid-term peak. You all agree with me? Okay. So again, this is a mid-term peak. So this downside, okay, now the question you need to ask yourself is, of course, I know once it breaks, it's going to go lower. But the question you need to ask yourself, when you look at a bigger picture, you look at a valley here. That means if I'm going to look at this valley and this valley, so when you look at this peak here, okay, I'm trying to add all these three together. So this pullback down, or this down move, Do you think that it's going to break lower than this valley? How many of you feel that it's going to break lower than this, or it might come down and hold on any one of our our Fibonacci levels? How many of you feel, because see, now I'm making it very simple for you to visualize the picture and see. So when you do that, when you do your analysis, so things can be very clear to you, it can be very crystal clear. So what I'm looking at is, since I see a two valley form, so this can be a midterm valley form, because if you see, the price has breached the high. So coming to this picture, if you look at immediately this, what happens is, this may look at a midterm peak, but when you look at a bigger picture, probably, this may be even a long-term valley. That means once the price starts to move up and breaks this high, this low becomes a long-term valley. You all agree with me? Please try to be as interactive as possible so that we can do, right? So this is how you do. So when you get a bigger picture, right, this is what happens, and this is how you have to do your analysis. Okay, now the question I'm asking you is, okay, now let me see. Okay, let me make things interesting for you, and let me see. But I want you to be as interactive as possible. Okay, now now the 60-minute is starting to move up. Okay, when do I know that the 60-minute has bottomed, or the market has turned up? Can anyone tell me, when do I know that this market, that means right now the market is coming down and is having a pullback? So when do I know that the market is going to turn? That means whether it's going to be on a 50-minute retracement, I mean a 50% retracement, or 61.8 retracement, or whatever levels you use. When do I know? My question is, when do I know that the market has turned up on the 60-minute? Okay, you see, no, my question is, when do I know? Okay, maybe I'll give you one example, then the next example you can follow on. So to give you an answer, okay, to know that answer, that whether the low is formed on the 60-minute, what should I do is, I should go on a 5-minute chart to see an answer. So this is how I use it to see. That means you split it. That means, when you go on a lower time frame, you get a bigger picture. That means, see, I'm looking to a low, when a 60-minute, for example, when a 60-minute is turned up or turned down, or a valley is confirmed, what kind of valley should you form on a 5-minute? Can anyone tell me? That means when you go on a lower time frame, what kind of valley should you form? Should you form should you see a short-term valley, or should you see a mid-term valley, or how many of you say that you should see a long-term valley on a 5-minute to see a confirmed turn on a 60-minute chart? How many of you say it's a long-term? Yeah, but definitely it's not a short-term. Okay, so this is how you must interpret. That means, see, right now I've already seen a short-term valley. Okay, let's do this analysis. Okay, on the 5-minute. Okay, this is the lowest low I've seen. Okay, if I'm going to see the price did close above this, so this is a valley, this is a peak, and this is a valley again. So now the price is telling you that this is a midterm valley is seen on a 5-minute. So a midterm valley is not sufficient to see a reverse on a 60-minute chart. You need to see a long-term valley seen. So in other words, what will happen to this price is, the price will start to move up, then you should see a peak, then the price should fall, and and you should see another valley happening. So that's what you can expect on this particular market to see on a lower time frame. So in other words, what I'm saying is, on the 60-minute, the low is still not seen yet. That means you are expecting still the price to break lower than this low. But of course, there is a gap here. So you have to wait for the gap to be filled, or you have to wait for the price to fill this gap. Then you can see the price making lower lows and lower highs. So I hope the message is clear. So this is how you use it when you use to answer your doubts. Okay, or a simple way to put it in, to make your doubts clear is, if you see a short-term valley or peak seen on a higher time frame. Okay, that means, like for example, if I see a short-term valley on a daily chart, then I should see a long-term valley on a hourly chart. Do you all agree? I mean, do you all agree with me? My statement, is it clear? That means if I am going to see a short-term valley on a daily chart, then I should go back on a 60-minute chart and see whether I've seen a long-term valley to give me a confirmation. Okay? Okay, perfect. Okay, this is what I want. So at least you all are with me. So this is how you use the analysis to take your trading decisions. That means the theory is very simple. That means if I'm looking at a short-term valley on a daily chart, I should see a long-term valley on an hourly chart. If I'm looking for a short-term valley on an hourly chart, I should see a long-term valley on a 5-minute chart. So that's how the theory works, and that's the simple strategy which you need to look to see your analysis to do. Okay, so that's how it works. So, and if I'm going to tell you, and your trading can be very much more simpler, if I'm going to tell you that the price is going to turn in any one of these levels, all right? For example, let's say I'm going to tell you that, okay, you can expect the price to turn at this level, or you can expect the price to turn at this level, then things could be very much more clear. That means all you have to do is you have to wait for the price to see test this level, wait for a short-term valley confirm, or a long-term valley. If you feel that if you are going to see the price moving very high, then you have to see a long-term on this. So that would be crystal clear. So what we are doing, as I told you early on, we use the price level principle. That means we are doing the work for you to tell you beforehand or upfront, to tell you that, okay, the price is expected to turn in any one of these levels. So this level we are giving you. So all you have to do is wait for the short-term valley to confirm on this level or this level I explained to you early on. And once you see a confirmation, you pull the trigger and you would be doing fine. Okay? I hope, is it clear? Okay, now let's look at another example. Okay, let me run through the question. Actually, I'm getting a bit tired. Okay, have a look at GU on a long-term peak or valley. Raj, okay, can you tell me what time frame do you want to look at? See, please try to be more precise, because see, I don't believe in talking on a vague picture. I would rather be very clear on what time frame you're looking at. So you are looking at a 15-minute. So your question is whether to see whether a short-term value or peak is seen on a 15-minute. Okay, let's see on a pound USD. Okay, now you tell me on a 15-minute. Okay, let's say I go on a 60-minute chart. What do you think should you be doing? Should you be buying or selling? See, the 60-minute, what has happened is the price has risen, and right now the price has made a peak, and you have a lower peak on the left side. So that's a very high chance that this might be a yeah, honestly I would appreciate that. Okay, see, right now what is happening is, see, you are identifying two peaks on a higher time frame. So chances are this may be a long-term peak. That I wouldn't know, because if the price is going to make a lower peak again, then there's a very high probability that this might be a long-term peak. So when you go on a lower time frame, okay, if you look at it, all you have to do is see the picture. What happens is when you get lower and lower, the picture would get more and more complex. So the best thing to do is when you do on a higher time frame, see, how you have to do your analysis is do your analysis on your higher time frame and take your trading entries on a lower time frame. So when you do that, chances are you would not be on the wrong side. So again, on this particular here, you tell me, what do you think whether the price, do you think it's got a very high probability that it's going to break this high, or whether the price is going to make lower highs and start to break the lows? Sorry, who asked this question? Or maybe anyone can tell me. No, see, because see right now what is happening on the 15-minute is, so you have a peak and you have a valley, you have a peak. So the price has breached the previous valley. So how many of you think, or how many of you think there is a very high probability that the price is going to make a lower peak and starts to break lower? In fact, I think some of you are already with me, right? So in fact, the price should start to break lower and lower, because if I going to use a higher time frame, okay, let's say I use on a daily. See, this daily time is telling you that the price is trading below the lay, and in fact, what is happening now is, if you look at this chart on the candlestick, or if you want a bar chart, whichever, I'm comfortable with either chart, right? So looks like, you know, it may form a peak on a higher time frame. Let's say we look at a 2-hour chart. So what is happening is, there is a very high probability, of course, once it breaks this low, then we can be pretty sure that the market has made a long-term or even a mid-term peak, because, you know, you have a peak forming, then you can expect the price to make a lower low. So the same thing, when you have that in mind, when you go on a 15-minute or 5-minute chart, what you should be doing is, when the price moves higher, you should be looking for a shorting opportunity or selling opportunity, and that's how you use it. So again, you look at this on the 5-minute, you see here a valley is formed. So now I would not know whether the peak is formed, but there is a very high probability that the price is going to form a peak. Then it should start to break lower and lower, right? So that's how you do, and this is just a simple strategy, and this is just a simple analysis you do to take your trading decisions. Of course, if I'm going to tell you that I'm expecting the price to turn at this level, then what happens is, your confidence level would be at the peak or at the max, and you do not have to look at many indicators, oscillators, and get yourself confused with too many things, because the moment you know that I'm expecting a price to turn at this level and the market gives you a peak forming, then you should know that the price is going to come down. And of course, putting a stop loss and putting a exit, that's what makes a quality trader. That means, you know, if I know that, you know, the price is not going to break this low, and you know, the price is going to have a strong support somewhere here, then I would know that I would put a sell and put a stop loss above this. Then, you know, I can go for a quick trade. So that's what makes a quality trader, and that's what, you know, you must always trade the market and not your expectations. So that's where sometimes, you know, in fact, our report, the words which we use when we define trend, okay, we use like sideways, up, down, turning up, turning down, corrective up, corrective down. So this word all has got meaning. So once you look at the meaning, you should know that, okay, this is what I'm expecting for the market to do, and you can get yourself prepared once the market breaks a certain level, and you can start doing your own analysis. Okay, in fact, the section 2, I would be giving some strategies, right? So some of you, if you feel that if you're really interested, you can come in for that session, and we would be definitely will be looking at live charts, and I can tell you where to take entry, where to put your stop loss, and where to exit. So that would be one of the discussions which I'm looking forward to, because I think if you make it as interactive as possible, then I can also make it interesting for you. Okay, let me see what's the next question. Excuse me. Okay, pound yen, 60 minutes. Okay, for those of you who are trading on crosses, 60 minutes. The good thing about trading crosses is, if you understand the concept well, okay, if you understand the concept well, then what happens is, things will be very much more clearer. That means it will be very crystal clear for you. That means, for example, when you trade pound yen, rather than you look at the peak and valley on just on the pound yen. But if you look on the peak and valley on the pound US and as well as the dollar yen, then you will get a crystal clear picture on the pound yen. Okay, let me show you that example. Let's say we look at this pound yen. Okay, if you feel that the peak, the peak is already seen. Now the valley is also has already been seen, because this is the lowest low and the price has closed above this low. But to give you a confirmation to see, let's say I go on a 5-minute. See, sometimes when you go on a 5-minute, even though it gives you a confirmation on a higher time frame, but a lower time frame would give you a clearer picture. So how many of you would agree on this 60-minute chart? How many of you say valley is already been confirmed based on a 60-minute? How many of you say I've already confirmed a valley is seen on a 60-minute? How many of you say yes? Can you just quickly say how many of you say agree that based on my condition I've said okay, you're perfectly right. Okay, let's say I go on a 5-minute chart. How many of you looking at the 5-minute chart would now say, hey, no, I have not seen a confirmation yet. Maybe I think this is a false break. So I think I would better wait for clearer signal. How many of you say that? How many of you say no based on a 5-minute chart? In fact, I'm only getting one answer. That means so far I think only one, at least I'm happy, at least you all are with me. In fact, you're right. So when you look at this on the down move, on the 5-minute, the price is moving higher, but on the 60-minute, valley is confirmed, but on the 5-minute it's not so. In other words, what it's telling you is this pullback on the high, this is going to be a false break. That means you expect the price to break lower. That's the analysis. I'm getting it based on the chart I'm showing you, and that's the report I'm showing you now. Okay, now let me make things interesting for you. Let's say pound yen, you're looking at pound US. Okay, let's see whether the pound US, see this pound US is falling and the pound yen is also following. Okay, let's say we look at a dollar yen. The dollar yen is, can you see this? This price is moving up. So in other words, what is happening is this pound yen, the fall is, what is happening is the pound US is dragging the pound yen lower. Do you all agree with me? Please try to make as interactive as possible. Yeah. So you should know the pound is dragging the pound yen lower, and the dollar yen is in a range trading. So when you do your analysis on pound yen, you should closely watch the move of pound US in order for you to do your pound yen. So coming back to your answer, to see your thing. So now the pound US, if I see on a 5-minute chart, okay, let's say on a 5-minute chart, again it looks a similar picture. Okay, let's say I put both the charts together. Okay, let's say I put a pound yen and pound US together, so at least you can visualize and see the difference. Okay, I show you this chart with a different color. Okay, so what I'm doing is I put it's an overlaying chart, right? So what I've done is pound yen and pound US I put in overlay. So one look at it, you know that the pound US is what is dragging the pound yen lower. So when you look at this, so when you trade pound yen, when you pay attention to pound US, you would not go wrong when you trade on pound yen. So that's the beauty of when you trade crosses. But again, it becomes a bit tricky. But if you do not understand how this concept works, then probably you may get yourself confused, or probably you may get yourself lost. But when you understand the concept, what I'm trying to tell you, when you understand it well, chances are you will not be on the wrong side of the market most of the time. So you have to, that means when you trade pound yen, you have to closely watch pound US, the move of pound US in order to get the trend reverse of just give me a minute, I changed the color. So so in order for you to trade on that, so it is best for you to track this. That means when a peak is formed on a pound US, the chances are your peak should get on the pound yen, provided, and if you see a peak on a pound US and you see a peak on a dollar yen, I'll tell you, you would be making a lot of money. You know, that means you know that both have formed a peak. That means the dollar yen has formed a peak and the pound US has formed a peak. So pound yen, you should not go wrong on that cross. And once you pull your trigger, you should be making especially you can wait for your profit, because both are going to drag the pound yen lower. So it's because this is the first time I'm talking to you, so things may be a bit more tricky or a bit more complex. But when you use it, things will get, when you use as quite often, you know, then you get a clearer picture. Just like, you know, when you learn driving, like for example, you know, like first time when you go to learn how to drive, I'm sure, you know, you do not know where is the accelerator, where is the brake, and what should you do. But as you go on, when you trade, I mean, when you keep on driving, and especially you have like 10 years of driving experience or 20 years of driving experience, then I'm sure, you know, you can drive with one hand, one leg, you know, and you can do all kinds of gymnastics, you know, when you do driving. I'm just saying. So it's the same thing goes when you are trading. So first time we are listening to all these words, so you may get confused or you may get complex, but as you go on, when you are with me, you know, when you understand what I'm trying to tell you, then, you know, things would be much more clearer. Okay. Okay, I think more or less we've done. Okay, maybe I would want to discuss one more question. Let me see. Maybe anyone wants to discuss on any particular cross before we go on to the next euro yen. Okay, what time frame you want to look at? Okay, euro yen. You see, the best thing when you trade on yen crosses, when the pound yen is moving down, chances are, you know, all the cross should follow. So sometimes it may happen that one of the cross is moving against. That means like euro yen is down, pound yen is down, but Aussie yen is moving up. So when that happens, you know that the Aussie is dragging the yen higher. So when you trade that cross, you have to be extra careful, because when you trade on majority of the crowd, chances are you may not be doing the wrong side or wrong side of the market. So this is going to be a similar picture as the pound yen. So if you see this, this is again, this is going to be a good pullback. But again, you must understand that okay, this is only a valley is confirmed. Then this is a midterm valley is confirmed, right? This is not a long-term valley. So overall, is the price is moving higher. So we should be looking to short when you see a peak. So that's how you should be trading this. So the best thing, what I do is, you know, I do not take trades on market orders most of the time. So what I do is I use specific zone levels or entry levels for my entry prices. That means I only trade when the price breaks a resistance zone 1 or support zone 1. So that's where that makes me crystal clear. That means what to do, whether to be a buyer or seller. So I wouldn't want to do anything till the price breaks that level. So the same thing, you know, right now, if you ask me, you know, I have to use the price level principle to see how far this price is going to go, and that's where I decide where to sell and where to sell, you know, because definitely this is going to be a sell. How many of you say you want to go for a buy? Is there anyone who wants to be in this, I mean, in this room wants to go for a buy on this particular cross? So you should be making a quality trader, you know. Try not to be a quantity trader, meaning, you know, you want to follow every swing. That means, like when it makes a valley, I would want to go for a buy. When it makes a peak, especially if you use a 1 minute, then I think I think you would be working for the market. So what I would suggest is, because since you should know that this is a valley is formed right now, we are waiting for a peak to be formed. So of course the best choice should be, I should wait for a peak to form to go for a sell rather than I go for a buy now, because I know that, you see, maybe if you use your indicators, oscillators, RSI, so right now it is reaching overbought. So there is a chance of very high, even your stochastic is already overbought. So there's a very high chance that the price is going to make. So if you're going to buy, I'm not saying what you're doing is wrong, but you may not be a quality trader if you are going to be a buyer when you see here. Because you know that your risk versus reward doesn't justify. All right. So that's the thing. You need to take note on this. And Aussie yen, I think, is a similar picture. So this is going to be a similar picture, but this is something different compared to the euro yen. Can anyone see the difference? Okay, can anyone see the difference? Okay, let's say I put you the candlestick chart. Okay, pound yen, I showed you on a 5-minute chart. Okay, you see this. Euro yen, I show you a chart. Okay, see this. And Aussie yen, can you see a slight difference? Because what happened is, this has formed a different pattern. That means, it is formed like a double bottom, and looks like it is formed a long-term low on a 5-minute. And also you see the net change is only about 10 pips compared to pound yen. Pound yen is it is also, I think it has also had a pullback. I think euro yen was much lower. I think, yeah, it's about 80 pips down. So if you look at this overall, I think the euro yen is the weakest. So that would be one of the way to do your analysis to see which cross to trade. Because some of you, I understand that some of you only trade only on a particular cross. I think, if you want to be in the business most of the time, then I would suggest, you should be trading the market. That means, nowadays, trading is not a easy game as 10, 15 years ago, because 10, 15 years ago, what has happened was, the information was not readily available, but trading was much more easy. But nowadays, the information is readily available because of this internet and a lot of free service providers coming in. And of course, there are some sites which are damn good, so in fact, I think FX Street is one of the best sites, in fact, they are doing a lot of things to make you a quality trader. So, what I'm trying to tell you is, as a result, things are getting more and more complex. So you have to be in the market. So you should be having a wide choices rather than you only trade on Euro USD or you only trade on Pound USD. Because what happens is, most of the time, sometimes, the pound, in fact, the euro for the last whole month, it has been dead quiet, So that's the thing you need to take note. Okay, I think we are running short of time. Okay, moving average periods. Okay, moving average is a lagging tool. So you must know when to use the moving average. If you're coming late, what I would suggest, I think this session is recorded. So I would suggest probably you can play back and listen to it. Okay, what peak are we waiting for? This is basically, I'm looking at a 5-minute chart peak, right? So please stick to your analysis when you do. That means, I'm looking on a 5-minute peak, so I'm looking for a short. So whenever the market is not clear, what I would suggest is, see, if you feel that, on this particular market, a short-term low is going to be formed, and you feel, there is a high probability, like for this scenario, there's a very high probability because, as I told you, that the price is making higher lows. So there is a high probability that a short-term low can be formed on a 60-minute chart. So what I will be doing is, I would be waiting for a peak to be formed, look for a short, and I would plan to exit before this low. That means, any quick profit, I would want to book my profit. So that would be my game plan based on this chart. So on that note, I would know that okay, this is what I'm trading the market. So this is what I'm doing, and this is what I wish to do. So when you plan ahead, chances are you may not be doing the wrong thing, right? So I think we are running short of time, and once again, I wish to thank FX Street for organizing this event. And once again, nice to see you all, guys. I think it has been a wonderful session because you all have been as interactive. But I think, in fact, some of the guys have been very quiet. But I think what I feel is the more you ask questions, I think the more you learn, because the more you keep silent, chances are you may not have get the message right. Unless you ask questions, at least you know whether you're doing the right thing or wrong. You know. And also, do take note that we have upgraded our website. Okay, we have just launched our website since yesterday. Our website is precisetrader.com. Okay, you can see the address, and we track about 36 crosses, and we do regular webinars. Every week Wednesday, and we do webinars with FX Street every Tuesday and Friday. In fact, tomorrow I have a webinar with FX Street. So looking forward to see you again, and because it's going to be a live trading session, and we do, because this is going to be definitely you would not regret, because what I feel is the more, but I want you to make as interactive as possible. The more you ask, the more we learn as a group. So, and we have I think the second session in another half an hour session. That's where I would be discussing on some strategies, because I plan to give some strategies, and I plan to use our reports to take live trades. I'll tell you, this is where we plan. So if you feel that if you want to come up, those of you who have registered, okay, I'm looking forward to see you. For those of you who have not registered, please do so. We have another half an hour, and looking forward to see you again. And once again, thank you very much, and thank you for this wonderful session, and goodbye. Bye.